communication with teams whilst they are in the waiting room. You know, whilst you are here, we'll be asking questions. We don't want the report to be leaking to the people out there because you naturally will leave. I hope you know that. Okay. Thank you very much. And then students, mentors, and faculty must all abide by the CFA Code of Ethics. What defines us as CFA is our ethical standards. I mean, it distinguishes us. As I stand here, if I violate it, my CFA, I can't even put it by my name. After all the years I struggled to get it. Okay. So now let me tell you what you get when you are done with all that by applying the rules. So in your work, okay, I think, okay, good. So this is the part I love. Here you see how you be graded. Okay, I hope you can see the numbers. So the financial analysis gives us 20, valuation gives us 20, environmental, social and governance gives us 20. This looks like a CFA resource slip. Yes, it tells you where things have been, okay? So at least from here you can tell when you are being graded. Okay, so please give me the next slide. Okay, so this is the group that we would be studying. MTN Group, and I'm sure you already know MTN Group, okay. So let me see, what are you to tell us? No, I won't say anything much about it, but you have to tell us something about MTN Group. I want to tell you what you will get when you are done. Good. So from here, when you are successful as the winner, you will go and compete in the sub-region. Our big boys, Nigeria, is always worrying us. But we've beaten them before. We hope we can beat them. Then from the sub-region, you go to EMEA. You know EMEA, Europe. And then when you win, you go to global. Okay? So it's not just Ghana. And we hope that you go global. So what else am I to tell you? So the final is in May. Last year it was during the members conference, right, in Chicago. Yes, that's where they had it. Okay. Now what else? Okay, good. So when you are first, you have a trip to Egypt for the May 2026 Regional Societies Research Challenge. So you move from here, you will go there. So, but please know that there are terms and conditions. When you are moving people out of town, we don't control the variables. And then you have internship slots. You have award for each member, research support, branded souvenir, and certificate of participation. Okay. Oh, the others will also get something. It is all available. Okay. The joy I have is that participating in this even gives you the confidence that you can take up this profession. And then who knows, you can join the fraternity as an intern, okay? So I think I have taken too much of the time allotted to me, but thank you and all the best.
Thank you, Marwan. Before I introduce the participating teams, I would want us to meet our faculty that supported the teams through the journey. First on our list here is Dr. Benjamin Amwa. If Dr. Ben is not available, okay. Dr. Godfred Awa. Is Dr. Okay. We have Dr. Philomena Aqua. Welcome. We have Dr. Anthony S.L. Anderson. It's like Dr. Anthony has fans. Dr. Joseph Oscar Akuti. Is he here? Okay. We have Dr. Karekare Nana Kwesi. Dr. Karekare is my new friend. Dr. Peterson Owusu Jr. Now we'll meet our team of analysts. The first thing we have here is 360 Insights. If 360 Insights, let's see you on your feet. You're all looking like you're actually going to pitch a stock. Please have your seat. We have Alpha Capital, if they are here, Alpha Capital. Clear Path Advisory. Clear Path. Some of the names I would want to know the meaning behind these names later. Sigma Capital Partners. Team Apex. Team Atlas. Let me pronounce it as a Ghanaian. Atlas. Team Mentalix. These are Gen Zs are doing a lot with these names. All right, so those are our teams. So the rules is that the first team that will be presenting will be Clear Path Advisory. So before they start their presentation, all the other teams will move to the breakout room. Whilst the teams are moving to the breakout room, we would have a word from our sponsors. So please, if you are a part of Clear Path Advisory, kindly remain seated. If you are not a part of them, please we would usher you to the breakout room. Whilst we have our sponsors.
Dear future me, I hope you are living the life you dreamed of. Finally, running the business you've always wanted. Waking up each day with purpose and enjoying the freedom you worked hard for. I hope that your efforts over the years led to a life well earned. But dreams do not happen without action.
Your future self is counting on you. Fulfill your promise of a better tomorrow. Start saving with Access Pension Trust to achieve financial peace of mind. Visit www.accesspension.com/futureme to learn more. Access Pension Trust, your reliable partner in pensions.
All right, if Clear Path is here, let's put our hands together and welcome them as we start our competition. Clear Path Advisory.
Who would have thought that a country birthed forth from an apartheid will rise as the leading force in the telecommunication industry in Africa within 3 decades? Journeying from Investicom, Ariba, Spacecell, this country or this company has made a firm for itself. This just didn't happen. By strategic financial investment, good governance, value for customer experience, this company has made a name for itself.
And we, as Clear Path Advisory, will bet our buy stand on MTN Group Limited with a target price of 243.12 South African rand and a target price of 243.12 South African rand, which suggests a 12.43 upside comparing to the current price of 174.12 South African rand. Therefore, MTN Group is best positioned for both conservative and long-term risk-tolerant investors. Now, MTN, using 3 big key main KPIs, so that is the revenue growth to the profitability measures.
Who would have thought that a country birthed out from an apartheid will rise through the ashes as a leading telecommunication force in the telecommunication industry, as one of the most competitive in telecommunication industry? This just didn't happen. Through strategic government policies, through investment decisions, value for customer experience, this company has made a name for itself, becoming a force to reckon with.
As ClearPath Advisory, we bet a buy stand on MTN Group Limited with a target price of 243.3 South African.
Digital services, data and voice. MTN over the years has been able to achieve a larger revenue for their activities, which has improved their reach in Ghana and South Africa. MTN revenue has increased over the years for about 13.7 billion. Their connectivity services has helped in all these improvements. So MTN over the years has been adopting to the ESG framework of the UN developmental goals. So MTN has a strong leadership which consists of a 33% females, which also adjusts to the SDG 5, which is gender equality. MTN also have good governance, strong diversified expertise, which is helping to stay in the competitive markets in the world of financial and digital services. MTN, in relation to ESG, in doing for the environment, MTN has an ambition of 2040, achieving a project zero of carbon emission in the environment. And MTN is doing this through the reduction in the usage of fuel and diesel by bringing in solar panels and wind energy to support their activities. MTN also, in doing for people, channels this through the MTN Foundation, in which they provide potable drinking water and education to those in deprived areas. In governance, MTN is very strategic in it by providing anti-corruption and bribery, human rights, and cybersecurity in relation also to responsible taxing.
Having a historical analysis, checking the income statement, we could realize that the total revenue from 2020 to 2023 was increasing gradually, but at the start of 2024, at the end of 2024, it decreased sharply. And also our gross profit margin moved from 72% to 70% in 2024, which is very bad. Checking our EBITDA margin also, we could also realize that in the subsequent years, it increased from 44% to 30% in 2024, also showing the decline in its revenue. This was as a result of forex exchange losses and the Nigeria Naira devaluation. Also, with the balance sheet, we could realize that the total non-current assets initially increased from 235 to 288 in 2024, which we also noticed that it was declining as it moved forward. And also with our total equity, as a result of less cash flows into the company in 2024, it decreased. But projecting in 2025, we realized that as a move up from Ghana economy, as a change in our election, we could realize that the industry, or after the end of 2025, the revenues of MTN was increased, and it changed it from that. So at the end of the equity and the liability from 2020 to 2024 had a destabilized way of increasing and decreasing.
At a target price of 243.21 ZAR, which is blended by the valuation of discounted cash flows and trading comparables, it indicates that there is an upside of 23.3%, which shows that the MTN share price is undervalued. Discounted cash flows by discounting the expected future cash flow using the weighted average cost of capital. Looking at the assumptions, the revenue is expected to grow at 8%, which is driven by the data usage growth, the fintech mobilization, and the network expansion. EBITDA margin is expected to increase from 39% to 42%. Considering WACC of 19% and a terminal growth of 4%, the discounted cash flow shows an enterprise value of 498 million with a net debt of 20 million and equity value of 380 million, which showing an implied share of 270. This indicates that MTN share is undervalued.
Using the trading comparables, we realized that we could benchmark MTN with other groups, which is Vodacom Group, Airtel Africa, CCL, Telkom SE, and Maku. And we had a multiple outreach, which is EV over revenue, EV over EBITDA, EV price over sales. And at the end of it all, we had a share implied price of 203 South African ZAR.
Even though MTN operates in a lot of high growth economy, it has experienced a lot of risks, such as operational risks, currency risks, and regulatory risks. Operational risks, such as the risks that occurs within the organization. Operational risks can be mitigated by cybersecurity investments, staff monitoring, and the likes. The currency risks are risks that occurs due to loss of currency in the and exchange rates. It can be mitigated by forward contracts. On the other hand, regulatory risks, these are risks that occurs during when there's a change in government, in the economy, and it can be mitigated by compliance investments and geographic diversification.
MTN Group Limited is not just benefiting from the African global market, but is taking a stand to go beyond profitability and create value for customer base. We are ClearPath Advisory. Thank you.
We now take questions from our judges.
Yeah, so congratulations, you've done very well with your presentation. So my question is, you did mention that there are some competitors that MTN have, right? So what's stopping those competitors from replicating the strategy of MTN? And also, how do you see that affecting your analysis going forward?
Sorry, before you answer, let me just chip in. Since he's talking about competition, how do you put Starlink in the mix, looking at the contribution of data to MTN's revenue?
Okay, so MTN, despite its stats during the appetite period, has risen over the past 3 decades and has been envious in the industry markets because of their first mover advantage always. And MTN has consistently been branding itself to ensure that it catches larger percentage market share in various economies. Despite sometimes certain poor economic stability and external factors such as the Sudan economic environment, MTN has still taken certain strategic decisions to ensure that its revenue and profitability measures, which makes them stand out, to always be the best and also make sure they attract high customer base. Also, the recent acquisition of even IHS Towers, which other competitors haven't done, that makes MTN also be able to operate in the market, and also even giving a very strategic attention to even the financial sectors, because now we realize that MTN is even creating certain services which bankers, which financial institutions used to offer, which means that MTN is always taking strategic decisions and also making competitive decisions to ensure that it stands out despite the competition in the industry.
Okay, so you offered a buy recommendation.
Yes, please.
Data constitutes a significant portion of MTN's revenue. Assuming Starlink decide to enter the various markets of MTN, how do you think MTN is prepared to manage that? MTN Group is prepared to manage that, and how do you think that impacts your buy recommendation?
Okay, so I'm going to give you an insight and my colleague will add up. So we will see that in recent times, MTN is investing highly in 5G, which Starlink isn't. And MTN currently is also moving into certain rural and undeserved areas within economies, which Starlink is not able to get there. MTN also has high investments and enough capital. When you check their capital structure, you realize that they've been investing mainly into long-term sustainable measures, which will make them stand out to be able to offer the services and still be the largest market share in the economy.
Okay, it's fine. If nobody else has, I think you did justice to it. Let me find out, the acquisition of IHS, how do you think it's directly impacts the valuation of the company?
Okay, so with that, MTN is acquiring 100% merger acquisition, which means that they are going to take over the whole valuation, the whole IHS Towers, pay off their debts. They're even rolling over the debts, although it has about 24% shareholder stake in IHS, which means that MTN is no longer going to rent towers to perform certain services, such as the fiber optic and its connectivity services, which will make them be able to go large into other economies and improve on their services, fintech solutions, the IoT deployments.
Don't answer all the questions.
Okay. Team ClearPath, good job so far. Yeah, I have 2 questions for you. Okay. Can you let us in on the reason for your choice of valuation methods, and then what weights you placed on them, and then why?
So with the valuation, we chose to use discounted cash flow and trading comparables because we see that with the discounted cash flows, it is the widely most used valuation approach in determining the value of a company. So we use the discounted cash flow for that. Then with the discounted cash flow, we use a WACC of 19% because when calculating for the cost of equity, we got a cost of equity of 18%. Then calculating for the weighted of the cost of equity and cost of debt, we arrive at a WACC of 19%. And we expected that the terminal growth rate of MTN is 4%. That's why we use 4% in determining the growth rate and a WACC of 19% in determining the discounted cash flows.
Okay. Why are you using discounted cash flows and trading comparables?
With the discounted cash flow, we found it that the discounted cash flow is the widely used valuation in discounting, in determining the value of a company. Because with the discounted cash flow, it's able to determine the expected cash flows from the, is able to determine the expected cash flows of the company.
Okay. Did you make any consideration for using, say, asset-based valuation methods, considering how capital-intensive the telco business is? Okay, and if you didn't choose that method, why did you opt for the methods that you used?
Okay, so just to add up to what he said, looking at the trade comparables, it gives the whole enterprise value of MTN, despite that is the equity value and that's of the debt aspect of MTN. Realize that the debt to assets of MTN Group is highly leveraged, although their debt service rate is one that is very recommendable, which makes debtors and lending institutions to continue to give out loans and give out funds for them because they trust MTN to be able to pay off their debts and also improve on their operations. Also, the DCF also shows the real intrinsic value of the company, what it entails, which the trade comparables doesn't. So we gave a 60% rate to DCF and a 40% to trade comparables, and on the average, the valuation of MTN Group Limited is a very good one.
Why didn't you consider sum of parts?
Okay, so with the please.
So, for instance, MTN has different service, like we have fintech, we have other units. So why didn't you consider, for instance, valuing each of those units and then summing? That's to help you to give us the motivation for using the valuation methodologies that you use.
Okay.
Okay, so we didn't use that because finding enough accurate data to use that is a challenge. And even by using it as a benchmark to compare with other competitors wasn't good and wasn't realistic. And therefore, as advisors, we need to stand firm with our valuation method so that investors don't go bankrupt in years to come.
Okay, so my question is, how does MTN's ESG strategy affect its long-term sustainability?
Okay, so MTN ESG affects its long-term sustainability in a way that, because it is, when you take like doing for Planet Earth, although it is complying to the ESG requirement though, but by using the solar panels or wind energy to power their programs or their operations, it will also in the long term reduce their cost of operations, because that's by using the natural resources to power your operations, the cost of operations will go down. So I think that's one of them.
Also, MTN wants to tap into the $4 trillion that has been set aside for companies who go by ESG, which means that they are able to get enough investment to operate in the long term and create value. And they're also complying with other SGS like climate actions, responsible consumption, gender equality, innovation, and infrastructure, which means that in the long term, MTN Group Limited will be a good.
Okay, thank you. My last question. You mentioned currency risks Okay, so I mean, given that MTN operates in various markets with different currencies, some of which are quite volatile, how did you account for currency risks in your cash flow projections?
Okay, so with currency risks, we realize that although MTN is situated in diverse economies, such as economy like South Africa, which is a South Africa rand, Ghana economy, the Ghana cedis, we realize there are a lot of volatility, a lot of volatility in the currencies, and MTN has ensured that they use the forward contracts to lock the inflation or, let's say, the depreciation of certain currencies. And because it operates in diverse industry, they ensure that they comply or they think ahead to enter into certain contracts which will not make them lose off if a currency is to depreciate. For instance, in recent time, I realized that the South Africa rand and the USD dollar was a competitive one, but South African rand has still ensured sustainability over the years, which helps control certain risks like the exchange risk. Thank you.
Can I ask the last question? So give me a 1-minute pitch. The person who presented for financial analysis showed how MTN's revenue, profitability, and everything has fallen over the period, right? And he alluded to the fact, which is true, that the Naira had a significant impact on that. So how do you juxtapose that with your buy recommendation? And that is actually flowing from Ernest's question.
Okay, so it's still a buy for MTN because despite the Naira and even Sudan economy, which has not been doing well, MTN planned ahead to shut down so that they don't run into losses and invest in other booming economies which are performing, such as the Ghanaian economy and the Uganda economy, for instance. Thereby, they'll be able to generate enough revenue from those economies whilst they wait for the other economies to rise up, then they move there as well. Thank you.
Well done.
Thank you very much.
I was going to save them from the last question, but Anas just didn't give up. I think we can put our hands together once again for them. No, it just gave me my first interview with KPMG and the kind of questions that were flowing towards me. When the gentleman said ZAR, it also took my mind to Access Bank. I was on a trading operations desk. So I called the counterpart and I was like, I want to trade so and so ZAR. I said, South African rand? I was like, yes. So, I mean, well done. We'll now invite our second team. Team 2 will be Sigma Capital Partners. Let's put our hands together for them. Welcome, Sigma. Is this Sigma in terms of signal or? Please, some of you can go to the other side. So for the ground rules, you have 10 minutes to present, after which there will be questions that you will be required to answer. We will signal you when to start.
Thank you very much. Are we using this? Oh no, I'll be moving one of you. No.
So try that. Like shift.
I pressed it, it's not.
So move up, among the slides and let's see.
That's what I'm doing.
is MTN Group able to scale up? Well, we noticed that they have a telco pivot where it's transitioned itself from just being a single server telecommunication provider to a multinational digital solutions provider through 4 growth engines, namely fintech, the digital infrastructure, their digital ecosystem, as well as their enterprise solutions. For instance, in the fintech space, they are able to cater to the underbanked and unbanked African population, estimating their monthly active user base to be over 64.3 million. And these growth engines are crucial to the growth of their subscriber base by 300 million as at the 3rd quarter of 2024 in their 16 markets.
Okay, now moving on to the competitive landscape. MTN wins where it profits the most. In the key profit markets, Nigeria, Ghana, and Uganda, MTN is a market leader. But in the South African market, MTN comes second before Vodacom with a market share of 32%. Vodacom entered the market early and scaled up quickly, so that right now it dominates the fintech sector. Telkom and Cell C are also slowly eating up market share as they are becoming more competitive in the data pricing wars. And in other markets across Africa, MTN remains dominant, but that dominance is also making them a constant target for regulators. Okay, now on the Porter's Five Forces analysis. MTN is facing a new threat from satellite internet providers like Starlink. These satellite internet providers are bypassing the traditional telecom industry barriers in terms of infrastructure setup, going directly to the high broadband segment. And then in the industry, there's also very high competition between the rivals as they engage in data price wars, which is also pressuring the margins. And it's also very easy for the subscribers, particularly highly price-sensitive customers, to switch between the telecoms as they are often multi-SIMmed.
Now, moving on to the financial analysis, 2024 was indeed a bad year for MTN. Their net profit margin dropped sharply into the negative territory, and this is mainly due to the currency devaluation of some subsidiary levels, which translated to foreign exchange losses at the group level. Also, MTN managed to maintain their debt-to-equity ratio at a fair minimum point. You know, when companies are going through all these financial difficulties, they sometimes try to borrow to cushion their operations. But here the case, MTN's debt-to-equity ratio is at 1.12 times, which shows that in spite of all these difficulties, they were not relying so much on debt. And all these challenges pointed out to a better EBITDA margin in 2025. MTN Group surpassed its competitors in South Africa by having a growth in their EBITDA margin, which also led to the growing subscriber base in 2025. So when you look at their subscriber base, it increased from 2024 to 2025 third quarter, which is attributed to the fact that there is high demand in the fintech sector as well as the data sector. And also, their historical debt ratio has been on a downward trend, which is showing that MTN is trying to deleverage as well as maintain a resilient balance sheet. So looking forward, our projected revenue is optimistic, and then we are saying that coming 2029, MTN revenue is going to grow at a compound annual growth rate of 8.89%, which is attributed to the fact that their subscriber growth rate is going to increase at 3% annually, as well as fintech and data is going to increase at a compound annual growth rate of 24%. Even though voice is declining, the fintech growth and data growth would cushion this voice to bring out a better revenue forecast.
Okay, so the strong margins and strong cash flows are important for MTN, but for the long-term sustainability of the company, its ESG framework is very important. So environmentally, MTN is committed to reducing its carbon reliance, and this is evidenced by the reduction in the combined Scope 1 and Scope 2 emissions, as MTN is adopting solar energy, which is also cutting down their energy costs. And socially, MTN has spent 189.5 million rands on corporate social responsibility activities, benefiting 2 million beneficiaries, in the process nurturing loyalty in their customer base. And the governance side, the board is made up of 12 independent non-executives and 2 executives, ensuring transparency.
All right, so by now, Mr. Ernest is wondering how we're able to come up with a hold recommendation. With this, we use multiple valuation methodologies, and one of such we applied was absolute valuation methodology. With this, we had a beta of 1.6 and an industry or a terminal growth rate of 3%, which is consistent with MTN subscriber growth rate. With this, we had an equity cost of equity to be 12.8% with a weighted average cost of capital to be 11.77%, giving us an equity value of 357.1 billion and a share price of 189.59%. We also tried comparing MTN to HPS within the industry to put a value on MTN. We had an industry average of 6.0, giving us an equity value of 342.8 billion with a share price of 185.93%. To reconcile everything, we assign a 70% rate to their absolute valuation because of MTN, our strong confidence in MTN cash flows, and a 30% relative valuation because this one is mostly based on market sentiment. With this, we had a target price of 188.5% as against 179.18 as at 17 January 2026. With this, we had a target upside of 1.18%, affirming our hold recommendation. We also looked at some of the risks that investors might incur investing in MTN, and one of such is macroeconomic uncertainties, as my colleagues have spoken about, the Naira rate, the Naira valuation volatility, and also some regulatory challenges in some of the countries. With this, we also conducted a best and a worst case scenario. With this, we had 152, with the assumption that 50% additional devaluation in most of the currencies that they trade in, and also with the bull case, we had 225 South African rand, with assuming that the fintech industry is going to go successful. So to put everything into context, we believe that MTN provides a rare value opportunity irrespective of the economic headwinds. However, the market has already priced most of the structural drivers in MTN growth, which affirms our hold recommendation for MTN. Thank you.
Hello. Okay, so Team Sigma, that was a very good presentation, and congratulations at this stage as well. So my question is, you did mention an upside, right? So why not a buy? And also, MTN recently bought the IHS Towers. How do you see that impacting their profitability in the future?
Okay, there is an upside. From our valuation, we saw that there is an upside, but the upside is minimal. It's only 5.18%. And also, when we did the valuation as of 17 January 2026, the deal with IHS Towers wasn't announced by then, right? So when we did our scenario analysis, we also included that in the book, is that if there is a spin-off in the infrastructure biobab segment, and also the much more growth on the fintech side, there would be much more returns on that. So we're recommending the investors who have MTN shares right now to hold for further capital gains.
And just to add on to that, so as we mentioned, we did both financial analysis and the macroeconomic assessments of the markets that they operate in. Now, because of how many markets they operate in, they are susceptible to the volatility in these various markets, macroeconomic volatility. So Nigeria, for instance, even though the Naira is stabilizing just a bit, that 40% plus devaluation in 2024, even though it has reduced by now just a little, it is still a huge risk to investors as well, which will affect their share price in the future. So after assessing that financially they're viable, still macroeconomically there are still some threats or some risks to be careful of.
Okay, so now, well, I just wanted to ask a follow-up question. So now that you know about this IHS acquisition, do you think it has any impact on the valuation and your recommendation?
Yes, we have a book case for one of our scenarios, and we think that the IHS Towers deal is leaning towards that book case, so that is going to make our recommendations lean more towards the book case, so which will make it a yes.
How specifically do you think that acquisition is translating into the modeling?
So if you look at our book, we looked at the fintech industry, and their acquisition is basically going to help them to expand their coverage in terms of the fintech industry and other sectors of the revenue generation. And in addition to that, they are trying to also reduce their operational costs because they realize that acquiring it will help them to be able to manage most of their operational costs as compared to them leasing or hiring third parties to run their operations for them.
Yes, just to add on a little to that, IHS Towers manages 30,000 towers across 7 countries. So this means MTN will have much more infrastructure to penetrate through the market.
But they are not acquiring all, so you should check your facts. Some of them are being sold. I actually had a follow-on question on that. So you spoke about deleveraging, right? And then part of this is being, MTN is rolling over the debt into their books from this acquisition. So how do you think that is affecting your deleveraging points, which was part of your analysis?
So MTN has the target to build balance sheet resilience, which is to make sure that their debt is going down. So at the moment, they are trying so hard to focus more on equity financing than the debt so that their cash flows will become strong.
Yeah, but they are rolling the debt of IHS Towers onto their books.
Yes.
Actually increasing their leverage?
Yes, yes, I get that. Even though they are rolling the debt of IHS Towers into the book, for Nigerian, for instance, there has been a renewal of the IHS Towers to 2030. I think this is going to help them to maybe if they are leasing yearly, it would come with higher financing costs. But if they are able to capture a long duration, then it can subsidize the cost, which can contribute to the deleveraging abilities.
Okay, so I have another question. With the current declining yields, where the bond market doesn't seem very attractive, and you are recommending a hold for us, don't you think we have to put our money into equity, into MTN? And given that there is some kind of upside potential, do you think it's a good move for us to invest in MTN?
Sorry, I'd just like some clarification. When you say the bond market, are you referring to the Ghanaian bond market?
Yeah, so generally yields are down, generally, especially here in Ghana. So as an investor, do you think that it's a good move, even though you are recommending a hold, do you think it's a good move to still increase my position in MTN?
Yes, we believe that it is a good move to still keep your funds in MTN stocks, so I'm getting there. So it's good to keep your funds in the MTN stocks as well, and that's why we are recommending the hold. Now, with these developments, that as time goes on, we believe that it is possible that some of the projects that they roll out, some of the deals that they make, which we cannot obviously foresee because our valuation ended as of 17 January. But as these progressions go on, which we believe that are still geared towards the Ambition 2025 strategy of reducing operational risks, that would definitely increase their EBITDA and other key financials, therefore increasing their stock prices. So I believe that if you're asking for personal advice, it is important to keep a close eye on the market, and as they make these little projects and deals, you can slightly increase, but still be wary about some downfalls. That's why we are not pushing altogether for a buy, but a hold, but carefully towards a buy with time.
Okay, all right. Good answer, actually. So can you go to the slide on the financial analysis? No, not evaluation. Yes, financial analysis, yes. So the next one, if you look at the historical growth rates compared to your projections for the future, with all the market dynamics, the threat of competition in the data segment, and I mean, fintech not going to grow as widely as it has been in the past, don't you think your growth rates are too optimistic?
So I would just like to clarify, you said fintech is not likely to grow
as widely as it has in recent times. Wow, as in, the growth has been very phenomenal. Yes. It's not likely to be at the same rates going forward.
So,
yeah, if you disagree, you can.
So in terms of growth, we believe that it is still going to continue growing stably even if it might not be as wild as its initiation or initial growth rate, that growth is still important to take notice of. Now, in terms of we being overly optimistic, it's not so much about the growth in fintech, but how much they can dominate the fintech sector to be able to take the majority of that profits, even as the growth is still gradual. So with the gradual growth, we believe that MTN is positioning itself very well to dominate that market, even though generally fintech in Africa might not grow as quickly as it started.
Yeah, and in addition to that, with our assumptions we did for the revenue, projections, we valued the fintech separately, where we looked at how much each subscriber is bringing on board, and we used that to be able to determine that if the fintech is to grow at the rate that is growing, then the compound annual growth rate will be similar to the 8.89% that we are currently having.
Okay. Since we ran out of time, 2 more minutes. Can you talk us through how the currency risks, factored in your projections? You know, because MTN plays in various markets, right? Some of them have very volatile currencies. How did that factor in your financial projections?
Okay, so for our currency risk, I'm going to start with the long-term liabilities. So MTN outsourced loans from other countries overseas, more dominated in USD. So what we did was that because currency devaluation is so high in Africa, it makes the loan blows up. If they take maybe 5 USD from a foreign entity, currency rate can make it get to like, maybe at that point 5 USD was 1 cedi, but currency rates can make it get to like 3 cedis, which is making the loan like higher. So while we're modeling our long-term loan, we adjusted 5% buffer from the opening debt liability to cushion for any devaluation that comes from currency risk. Also, our lease liabilities, MTN leases in Africa, and sometimes if they are going to settle those leases, for instance in Nigeria, if MTN is going to settle a lease in Naira and the Naira has devaluated so well, it would cause them to have like more Naira instead of maybe it will cause them to have like more Naira at hand to settle that loan. So for the lease liability as well, we checked the historical trend of the Naira devaluation, and it was around 5%, and we also adjusted for that buffer.
Okay, so is that to say that you expect what happened in the past to repeat itself in terms of the currency dynamics? Don't you think you may be wrong there? I mean, given all that is happening, the Naira has got to a point where it will be more stable, even the cedi.
Yes, so the 5% here is not is an average, right? We can't predict so much the rate at which currency is going to be devalued. So it was like an average of what has been happening in the past, just to serve as buffer.
Just to top up a bit, we did our research on nairametrics.com. We looked at the forecast for the Naira from 2025 to 2030, and in 2030, the Naira is expected to be about 2,000 Naira to 1 USD. Right now, it's about 1,200 to 1,400. Therefore, you can see that expectation by economists online, that the research is there to be searched, shows that we are not underestimating the Nigerian market. Nonetheless, economics say that it is still expected to depreciate going forward.
Sorry, I didn't want to do this, but you don't think the currency impact will go through revenue? Because I didn't hear you talk about its impacting revenue at all. Revenue and cost, and then and then also know that the leases you alluded to, because of the acquisition of IHS Tower, they don't have to pay for leases anymore.
So looking at the financial analysis and the projections, we actually considered We actually considered the macroeconomic risk, such as the devaluation of not just Naira, but also possible African currencies. So because of that, we modeled the voice at 1%, a flat growth rate, because we noticed that voice is actually the highest growing factor in the telecommunication space for Africa. So a lot more people are using their phones to to core, but at the same time too, it is declining in the MTN group's customer base. And we also use that to understand our fintech and data, because the 24% CAGR sustained rate was not just about Momo acceleration, but also about how the economic factors such as the GDP growth rate in countries like Uganda and Ghana are also going to impact the ability for people to use financial services.
Thank you very much.
Just in case, look at some of the things that we have alluded to and use it to better your presentation. There are a few missing links here and there, so make sure that you put it all together and then you argue the whole presentation towards a whole.
Let's put our hands together for them. Please have your seats. Frankly, I don't envy you guys. This is experience sitting in front of you and coming down at you. All right, so our next team is Team Apex. If Apex is here, please let's put our hands together for them as they walk in. Team Apex. Welcome. Some of you can go to the other side. Pointer is here. So before you start, hi. Two can be here, two can be at the other side, right? So before you start, you have 10 minutes for the presentations. When it gets to questions, one person answers the question, right? We want to save the time. So when you give the attempt for the question, we want to manage the time. And then also, okay. So we would allow you to go as much as possible. But for our judges, when the time for the questions is up, we'll please save them from you. Thank you very much. When you are ready, let us know then.
Good afternoon, judges, ladies and gentlemen. MTN Group is Africa's top telecommunications company. Despite its growth and market leadership, we believe that its shares are currently undervalued. We, as Team Apex, are recommending a buy for MTN shares at the 12-month target price of 236.25 South African Rand, representing an upside of 18.39% at the last closing price of 199.55 South African Rand as at 19 February 2026.
So now, what do we know about MTN Group? MTN Group was established in 1994, after which it achieved many milestones, like the acquisition of Investcom in 2006 and getting listed on the Ghana Stock Exchange in 2018, and also achieving its Ambition 2025 strategy. It is operating in 16 markets across Africa and is currently headed by the CEO, Ralph Mupita. It offers services like the fintech solutions, mobile services, infrastructure, and enterprise. Beyond the financials, MTN has proven itself in the ESG, gaining an AA rating from MSCI. Environmentally, MTN has reduced its Scope 1 and 2 emissions by 46.2%. And in governance, it has a 75% independent board and a strong ethics and compliance framework. Socially, MTN has a gender-balanced workforce with which it operates, with 43 of their female in workforce and 32 in leadership. MTN is also leveraging on Africa's youthful demographic, which has over 60% of their population being below the age of 25.
We also looked at the macro business environment of MTN through the pestle analysis. Politically, MTN faces regulatory pressures. Moving on to legally, MTN faces tax disputes and fines. MTN has strengthened its government engagement and regulatory compliance to deal with this risk. Economically, MTN faces currency volatility and high inflation. In response, MTN has adopted hedging strategies and improved its cost. Technologically, MTN is faced with cybersecurity threat. We also wanted to look at the competitive position of MTN in the South African market, comparing it to its main peers, Vodacom and Telkom. In terms of subscription, MTN is a scale ahead with a subscription base of 301.3 million, which is 35% more than the next peer competitor, Vodacom. By the first half of 2025, even though MTN experienced shocks in 2023 and 2024, by the first half of 2025, MTN has made a whopping revenue of 105.1 million and an EBITDA of 45.8 million, which shows that MTN clearly outperforms its peer competitors in the South African market. These are the key drivers that underpin our buy recommendation. Firstly, the share of MTN is undervalued. From our valuation, we predict an implied upside of 18.36. This is supported by the price analysis of MTN. By the persistence theory, we realize that when a phenomenon persists, there is a probability that that phenomenon is going to repeat. And so we can see that the MTN share price increased to 258 with some cyclical variations. And these cyclical variations are possible to persist. Also, MTN is in the maturity stage, and then it has room for value creation. Secondly, we realize that MTN's balance sheet is strengthening. If you look at MTN's liquidity ratios, there is no difference or little to no difference between the quick ratio and then the current ratio. Also, we can see that the liquidity ratios are declining. This shows that MTN is, or this may imply that MTN is investing its excess capital or excess cash into profitable ventures. Also, looking at the solvency ratio, we can see that the debt to equity ratio is declining over time from our forecast. We can also see that there is an increase in the interest coverage ratio. This is because MTN is deleveraging. And this is going to reduce the cost of equity, reduce the WACC, and therefore increase the value of MTN shares. Again, another reason why we support a buy recommendation is that the profitability of MTN is increasing across key margins. Even though in 2023 or between 2020 to 2024, Vodacom outperformed MTN in terms of operating margin and net profit margin, this diversion was due to MTN's elevated CapEx and then the restructuring effort by MTN to Ambition 2025. By the first half of 2025 and with our forecast, we can see that from 2024, MTN's profitability metrics will be rising, and this is even supported by the first half revenue, where MTN makes a revenue of almost more than 29% more than Vodacom, and then an EBITDA of more than 50% than Vodacom.
Okay, another driver for our buy recommendation is MTN's strategic focus, the Ambition 2025. Investors, MTN is no longer the traditional telecom you know. It is now transitioning to a digital platform. It is focusing on connectivity, fintech, and digital infrastructure. MTN is also optimizing in portfolio by exiting from non-core markets, example like Afghanistan and Guinea-Bissau and Guinea-Conakry. This will lead to operational efficiency, thereby positioning MTN above its competitors. Now, in investors, let's look at evaluation, where we selected 3 strategic valuations or techniques in our valuation methods. First is the DCF, which look at the projected cash flow of MTN at the present value. It gave us an intrinsic value of 230.39 South African rand with an upside of 15.45%. The assumptions we use are the terminal growth, cost of equity, cost of debt to be 32.02%, and WACC and then EBITDA, where we did a regression analysis of the South African share price, South African all share index against MTN's returns. In the sensitivity analysis we did, we saw that in the best case scenario, the share price will rise to 371.39 South African rand, which will increase the upside. Therefore, if you buy MTN shares now, you are going to get an upside even more than 15.45% when the conditions are favorable. And it is supported with our Tobin scale value of 1.2, where the market is seeing MTN to operate 20% above its book value of asset. Now, we choose the relative valuation model. This is what the market is saying that MTN's value or share price should be. It is a market sentiment by comparing its peers, Vodacom and Telkom. We did an analysis, and the relative valuation gave us an intrinsic price of 296.94 South African won with an upside of 49.41%. The same Tobin Tobin skill analysis hold here. But you can see in the relative valuation, even in the worst case scenario, it is still higher than the current share price. Now, residual income, we look at the residual income over MTN. MTN, after taking care of after MTN is taking care of its shareholders' return. We look at that analysis, it gave us an intrinsic value of 204.3 South African rand with an upside of 2.35%. This is also saying a buy. Dear investors, the DCF, we look at the projected financial cost. The relative valuation, we look at the market sentiment, and the DCF, we look at taking consideration the cost, is all saying a buy. In the sensitive scenario analysis we did, where all favorables are worse, like currency volatility, especially depreciation in Nigeria, increased regulatory pressure, stagnation in fintech and in data growth, and persistent underperformance in core market, the share price will drop to 163.25. In the best case scenario, where all the conditions are favorable, share price will rise to 371.93.
After assessing the potential outcomes of our scenario analysis, we now examine some key risks that would impact our recommendation. We did this based on the severity and the frequency at which they occur. The main risk here is the macroeconomic volatility. Now, to mitigate this risk, MTN aims to shift Nigerians' EBITDA to below 40% in the next 24 months to reduce this concentration. Now, to mitigate operational risks, MTN aims to shift 20% of network investment into digital and fintech services to reduce reliance on telecom competition. And lastly, to reduce cybersecurity risks, MTN has established strong governance at the management and board level and has invested in strong cybersecurity systems. Dear investors, with improved financials, strong ESG performance, undervalued share price, and MTN Group's strategic focus, we stand by our buy decision, and we advise that investors should take advantage of the market now for the potential to gain 18.39% returns on their investments. Thank you.
So these are our appendix.
Yeah. Well done, Team Apex. Yeah, did a very good job. I just want to find out, on your financial analysis slide, you are very heavy on the historical. Can you take us through what your forecasts look like and what assumptions underline your forecasts going forward?
Thank you, Judge, for the question. So we forecasted from 2025 to 2029. Our growth rate in the forecast made use of, sometimes we use the arithmetic. We use the arithmetic when we have fluctuations, and so we take out the fluctuation and then we find the average of the stable ones. With the where we have a steady growth, then we use the geometric. So our forecast shows that MTN is going to improve in its profitability ratios. EBITDA is going to rise from the fall in 2024, which was below 40%, to up onto 47% in 2029. We are also going to see operating margin to also increase closer to EBITDA, and net profit margin to also increase. Why I was talking about the previous was because previously, looking at data or looking at financial statements, you realize that Vodacom outperforms MTN. So somebody will say, if Vodacom is outperforming MTN historically, why are you saying that we should invest in MTN and not Vodacom? That is why I was explaining that the historical outperformance was because MTN has elevated CAPEX because it was doing more digital infrastructure, and MTN was also restructuring through its ambition 2025.
So don't you think the EBITDA margin for 2024, okay, looking at the level it was and the dynamics going forward, suggests that that is the normal trend going forward, instead of you expecting that it would jump? Why are you expecting that it will jump?
We are not expecting EBITDA to jump. However, we are expecting EBITDA to replicate the historic performance of MTN. if you can see, realize that in 2024, 2023, there was a dip. The dip was because there was severe Naira devaluation. There was forex losses that MTN was facing. There were impairment losses from Sudan. So these things affected MTN's profitability metrics. But we want to say that with our forecast, MTN is going to improve, not beyond its historic, but somewhere around the historic or a little above the historic, not so much.
Okay. So you're still telling me that these factors that caused EBITDA to dip are the only ones that you took cognizance of going forward. There are other factors that could cause EBITDA to stay at those levels. For instance, I mean, the threat of competition in the data segment, I mean, the heavy investment in capital, for instance, could, I mean, affect their margins going forward. Those dynamics didn't tell you any story different from what you projected?
We looked at all those dynamics. We looked at them. But then what we actually did was that looking at MTN's ambition 2025, where MTN is looking at portfolio optimization, in markets where they are not performing well, like Afghanistan, like Guinea-Bissau, they are exiting this non-core market. And so once they exit this non-core market, the competitors' increase in market share will not impact MTN so much. Even in the cases where MTN was experiencing volatility in MTN, we are talking about MTN trying to reduce its group EBITDA in Nigeria below 40%, so as to reduce the concentration of the revenue that MTN generates from Nigeria, so that it does not affect its group statement significantly.
In addition to that, one core thing about Ambition 2025 is optimize their portfolio. So they started exiting from non-core markets. This will make them focus on their core market to generate more revenue and EBITDA.
Okay, so my question has to do with revenue. You indicated that MTN is in a mature state at the very opening slide, right? And it's leading into decline. So if we just oppose that with the fact that competition is increasing, there is a threat